We're very bullish on Athena, which is probably one of our largest holding in our portfolio. But at least we're funding the things that we, the community, want funded versus what some guy isn't, right? And the democratic process has been subverted.
Bitcoin's price trajectory remains uncertain, with Arthur Hayes predicting a potential dip to $70,000 to $80,000 before a recovery to $250,000 by the end of 2025. He sees Bitcoin as a hedge against inflation and currency debasement, emphasizing its role as the only truly free global market. However, rising U.S. Treasury yields, particularly above 5%, could trigger financial instability, pressuring Bitcoin in the short term. Hayes also highlights the impact of macroeconomic shifts, particularly capital retreating from globalization back to domestic markets. Governments, especially in Europe, may enforce policies to keep investments local, given their rising debt burdens. Europe's higher energy costs make its industries less competitive, while U.S. and Chinese firms benefit from cheaper resources. On the regulatory front, Hayes cautions against over-reliance on political developments, arguing that crypto's growth to $3 trillion happened without government support. He warns that any regulatory clarity may not favor the industry as expected. Additionally, Hayes sees a future where blockchain technology integrates with artificial intelligence, allowing AI-driven entities to interact financially on-chain. While AI's current crypto involvement is mainly in meme coin trading, he predicts broader engagement in financial services and governance. Despite volatility, he maintains that Bitcoin's long-term trajectory remains bullish, driven by inevitable monetary expansion. Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
In Europe, it could be America, it could be Japan, it could be China, right? All over the world, the globalization effort where your capital could go where it was best treated. Obviously right now that's the American financial markets. The national governments all need that capital back home because they're all in debt and they need to fund their bond purchases. And so I use the EU as sort of a foil to discuss this because they're probably one of the most fucked economic blocks out there around. The first chart I showed in my presentation was a chart that Mario Draghi put up in the European Competitiveness Report from last, I think, September. And it showed the price of electricity per kilowatt hour in Europe, the EU, versus China and the US. And the EU pays something like 2 to 3 times more money per kilowatt hour for electricity, for energy, than China and the US. And so when energy costs you 2 to 3 times more than your competitors, of course your products are 2 to 3 times more expensive and your industry is less competitive. And that's why we're seeing, the European economic malaise, especially in Germany, where large manufacturers who produce iconic global brands cannot compete with China because China has cheap electricity, a great workforce, and produces the highest quality, lowest price goods in the world. And it's because they focused on generating energy in the cheapest way possible. The United States and how you can't really mesh the two. So what they do, they have to borrow money. And so I went through some ways in which I believe that capital will be restricted from investing in America. European capital will be made and mandated to invest in European companies, in European government bonds.
And what do you see as a solution here? There's a number of challenges and problems that you've pointed out to you, but what are the solutions that you would offer? What are some realistic ways EU can get out of this situation?
I approach it from the point of view of the ordinary citizen, right? And the democratic process has been subverted. Their will is not being represented. Most people just want a nice life, cheap energy, have a good life, good job, raise a family, all that kind of stuff, right? They're not really involved in all this political mumbo jumbo. But the politicians have hijacked their opinion and their vote and sort of gone on this other direction. I don't think they're going to be able to change that, the ordinary individual. However, if you are saving capital, there is a way that you can see this coming in front of you. The elites are telling you exactly how they're going to restrict your ability to earn the most amount is wrong. That's sort of how I'm approaching this. However, while I don't know when the peak will be. I've actually turned a little bit more bearish recently, and that's mainly because of how I see the 10-year US Treasury trading. For whatever reason, a yield above 5% seems to cause financial dysfunction starting in the United States and in the global markets, for whatever reason. And we've seen as the Fed has started cutting rates in September of last year that the 10-year yield bottomed at about 3.6%. Now it's at, I think, like 4.7%. All the while the Fed is cutting rates. But inflation globally is quite sticky, especially in the United States. And I think that we're on the cusp of a mini bond riot where you're going to get yields above 5%. Somebody's going to blow up in the US financial system. I don't know who, I don't know when. But we know what the response is. The response is printed money. And so I think Bitcoin being the only free market in the world where anyone can participate and express their opinion about the future is telling us, by the way it's trading, yields are rising in the US and Bitcoin is sort of struggling a bit. I mean, it reached 108,000. We haven't, plus 5% yield in the US 10-year treasury. I think Bitcoin could trade in between 70 to 80,000, very briefly, and then make its way back up. My call for the end of 2025 is $250,000 of Bitcoin. I guess a random number. It's a nice whole number, $250,000. So it sounds nice. We basically hit about 100,000 last year, so that's kind of where I'm at on sort of Bitcoin. On the altcoin space, obviously altcoins will follow as everyone with Bitcoin feels rich and they go and they buy altcoins. And I don't have any specific targets on coins. Obviously, we're very bullish on Athena, which is probably one of our largest holdings in our portfolio, and Aptos, which is our layer one bet. But again, that's just because we hold those in our portfolio. I think they'll do quite well into the end of the year.
Recently, Mo, of course, stepped down, and that caused some troubles in the ecosystem, or like the price action primarily. You think that they will overcome these over this period, and what do you think will drive the next sort of surge?
So, I mean, obviously we're advisors to Aptos, and I just refers to political action committee or this or that politician that they're the most important thing, and therefore their particular thing they need from a regulation is going to be enacted. And I think that has led this Trump's going to do a strategic Bitcoin reserve. He's going to liberate DeFi. He's going to do this. He's going to do that. And at the end of the day, Trump has a limited amount of political capital, and a lot of people have issues that they want him to solve. Crypto is obviously one of them. And so I think whatever crypto bill, if there one even materializes that comes out, is going to be a disappointment because it's going to be a series of compromises. And depending on when he decides he wants to push this legislation, it could be a good or bad time. Because if you look at his majority in the House, the Republican Party, they have a 1-seat majority in the House and a 3-seat majority in the Senate. It's razor thin. A few politicians in his own party could derail any sort of bill. And so I think because of the dynamics of what's going to happen in this sort of political landscape, people need to adjust their expectations down to, okay, maybe he said something positive, products that are put forward, and that's where blockchain is uniquely suited to allow anyone with enough money to crowdfund and say, I want this looked at. Not necessarily going to mean it's going to be successful, but at least we're funding the things that we, the community, want funded versus what some guy in academia or a bureaucrat wants funded.
Makes sense. How do you see the convergence of AI and crypto evolving going forward?
AI are going to be their own silicon persons, whatever you want to call that, and they're going to have to interact on chain. I think that Bitcoin and blockchains are the native thing for a computer intelligence to interact with, and that is what they're going to do. And we're starting to see this with meme coins. Obviously, that's the most interesting thing right now, and it's cool, but they'll do financial services. They'll maybe create their own sort of bureaucracies themselves. We don't know. But the substrate is there. It's technological money for a technological intelligence.